For more, we're going to bring in Steve Fleishman, who is Wolfe Research utilities analyst. He has an outperform rating at $112 price target on the stock. Let's start right there. Pippa laid out the regional benefits, the asset mix, the degree of regulated or not regulated businesses that Vistra enjoys. And the question now is, has it been completely recognized by the market? What do you say?
So we think it has not been fully recognized by the market. The data point last week was pretty profound from Constellation's deal. The price they're selling power to Microsoft is about $110 a megawatt hour, whereas the current market prices are only about $55 to $60. So if you were to reprice Vistra's whole nuclear fleet at a similar level, there's a really substantial amount of additional upside. We're still trying to figure out exactly how we want to bake that in, because it's every $10 is worth about $17 a share for Vistra on their nuclear fleet. So the question is, how much of that $10 might happen or not? But it's very levered to getting a deal like this or deals.
Yeah, I mean, I guess longer term, the question might be, first of all, how many of those types of deals are going to be available as the industry tries to clamor for dedicated generation assets to fuel the AI boom? And also, I mean, longer term, is it really going to be that the profitability flow is going to end up on the bottom lines of these utilities for this AI boom? Is there room enough for those types of returns for the power generation piece?
Yeah, so that remains to be seen. But every deal, aside from benefiting the company who signs it, it also tightens up the market because that capacity is not available. Either supply gets reduced if it's on site of a power generator, or it just incremental demand. So the supply demand tightening for the broader market happens whoever signs the next deal. And so, we're pretty confident that there's an upward bias to the pricing environment, and both the Talon Susquehanna deal and then this most recent Constellation Microsoft deal suggests just pretty meaningful repricing, particularly for nuclear. So part of the question is, how much will that also come for gas assets? But for nuclear, there clearly seems to be a willingness to pay a lot more than what the current power price environment would suggest.
But, Stephen, one key difference here is that with 3 Mile Island, that was additive to the grid. So with all these data centers now coming online, is there any chance that we could see, local or regulatory opposition to data center agreements with nuclear providers directly, given that that would be taking power away from the grid as a whole?
Yeah, that's a great point. It's a key debate in the sector right now. And I think there is some pushback on that. On the other hand, the time to power aspect that the hyperscalers are interested in is just very hard to find scale locations for some of the size of data centers they want. Nuclear plants are really good locations for that. And then we will likely also see uprates of nuclear to help in terms of the issue of kind of providing additional power. But that is a fair point. And that's part of the question of, do you think these are worth $10 more per megawatt hour? Are they worth $60 more like the Constellation deal? We think they're worth definitely more. It's just a matter of how much.